Since most people don't pay attention to the real information out there, they will not be prepared. They will not hear this message. But you're here, and that is a great thing, because the first thing I want to talk about is the natural resources and what's been happening. You look at these commodities, the prices are rising, and people are finding it unaffordable. I'll connect in some information with that. The second thing we need to talk about is the middle class, because right now at this time, so many are struggling, and this should not be the case. In fact, we need a strong middle class for there to be growth, for there to be an economy. And the third thing we need to look at, stocks a lock. Is the stock market necessarily going to go higher in real terms? I've got all of that and more. Let's begin. First things first, China is running out of water, and that's scary for Asia. Of all of Beijing's problems, demographic decline, a stifling political climate, the stalling or reversal of economic reforms, dwindling natural resources may be the most urgent. This is not just in China. Look at what has happened in the west of the United States. Look at other places that are struggling for the most essential thing, and that is water. It's not just about the water, but now they're creating water derivatives, which in my opinion is extremely dangerous. Here was just an image right now. This is out of Bloomberg, but anyway, you could look at what they say, but I want to just highlight the fact that when we think about commodities, it's not just corn and wheat, but water is so key, so important for obvious reasons. Okay, you look at how this could affect the prices that we pay for the most basic things. I think that it is truly understated. At the same time, there could be some conflict in the future. We have been hearing about for a long time that could be fought over water. China's water situation is particularly grim. China possesses 20% of the world's population, but only 7% of its fresh water. Entire regions, especially in the north, suffer from water scarcity worse than that found in the Middle East. So this is unbelievable, just showing you that some of the rivers have disappeared. 80% to 90% of China's groundwater and half of its river water is too dirty to drink. So what does that spell? Well, in my opinion, that is civil unrest brewing before our very eyes. Watch what happens with water in any country and watch the uprising that follows. China fires up new giant coal power plant in the face of calls for cuts. This is so key because you look at what has happened over the years, going for the green energy, going for renewable energy, and as a result, you have seen a push away from coal. But now, as the prices had risen, you watched coal starting to become in favor just because, look, they had to get this up and running again, and coal started to make a comeback. I covered that extensively over the last little while. Now, the prices are up. Why? If coal is much, let's say, more inexpensive compared to the alternatives, why is it so expensive? Well, because of the mining. The mines were shutting down because they're getting put out of business, essentially. And then you had this occurring. Good thing. Okay, at least when it relates to the middle class, which we'll talk about in a second. Global discoveries for 2021 on course for the lowest in decades. We're talking about oil and gas discoveries, millions of barrels of oil equivalent. You could look through that here. All I wanted to highlight is the fact that we're not pulling this stuff out of the ground like it used to be. In my first book, I talked about how you looked throughout the period where, there was so much easy stuff to pull out of the ground. For talking about oil, you just knocked on the floor and this stuff would come up. But that isn't the case today. They have to go towards fracking. They have to go to the middle of the Gulf. They have to go to these extreme levels in order to get this oil out. That shows you, number one, that clearly it's difficult, but it also highlights the fact that prices right now, are going to rise on the average individual. And that brings me to this. What we're going to talk about here is about the middle class. I think it is so important and so prudent to pay attention. Economists warn of inflation inequality as poor get slammed by rising prices. It's not just the poor Okay, in my opinion, we look at this, it's basically the bottom 80% that are really taking a hit. Okay. The low and the middle income households spent about 7% more in 2021 for the same products that they bought in 2020 or 2019, an average of about $3,500. If you take that 3,500 divided by 12 and you look at the average survey, okay, so many people today between $200 to $400 a month of an increase, and now suddenly they can't make ends meet. That is huge to think about. I mean, just $200 to $400, one emergency expense, and they are immediately underwater. That's for the average person. That means if they're getting $100,000 a year, maybe it's $50,000 a year, whatever the case may be, this goes for so many people. Experts now fear that poverty will rise in early 2022. The benefits have faded, and I do believe I have that right here. There we go. You could see this for yourself. We are now at, whether it's state claims, whether it's unemployment insurance, emergency claims, extended benefits, and so on, are now at the levels that we were at the very beginning of 2020. So much of that has faded. There are other things like the child tax credit and others that will give people a little bit of a boost, but overall, most of the stimulus has gone away. Maybe they'll change that and they'll throw some more cash towards people, but at least for the time being. So what does this mean? Less money coming into the economy, less money being spent, all the little shops, not as many people walking in, and you see the reverberations. But there's a high demand for employees. But some people say, hey, they're not paying enough. So there's always this give and take, this push and pull, and we need to focus on all of that. I think is really, really key to understand, okay? So let's just talk for a second. Let's go a little bit further into all of this. I'm going to cover some information right here. And essentially, this next article is simply so key because it's going to highlight what we'll talk about. We are on the brink of utter collapse. Yellow cab drivers in New York struggle to stay alive. And if you look, this was worth $1 million at one point. $1 million to have this medallion, I believe they call it, to say that, we are allowed to drive the yellow cabs. And now today, because of Uber and Lyft and so on, the value has fallen. And then you put on top of that, everybody staying home, all the lockdowns, ridership down 80 to 90% since March 2020. Huge. Now, this is just one group of people. But what are the future prospects? Oh, it's only temporary, right? Everybody's going to get back to work, right? Well, not exactly, because if you look at what the end goal is, number one, to have people working from home as much as possible to reduce their dependence on the office. Doesn't mean it's going to be work from home for everybody forever, but certainly we see that there is a push towards getting people to work at home, at least temporarily, less commercial real estate to be needed. At the same time, whether it takes 5 years or 10 years or 20 years or who knows how long, they are pushing for autonomous driving. So there will be no need, supposedly, for the taxi drivers, the bus drivers, limo drivers, and so on. Maybe there's a premium service that will be still, available for people, but this is where they're going, okay? You hit a couple buttons on your phone and the autonomous driver picks you up and hopefully gets you to the destination in one piece, okay? Maybe they didn't hear what you have to say, but that's a whole different story, okay? Now, let's take a look at this next one. The key to Fed rate hikes, it may end up being the 2022 paychecks of Americans. That's right. Because you, the individual, are going to get so much cash thrown at you that you're going to be the inflation that they need to watch out for. Is this so? Well, I know a lot of people have gotten a raise. There's no doubt about it. The question is, has it kept up with the real rate of inflation? Not the CPI. Come on. Let's get serious, okay? Not the core PCE, my goodness. Okay, even those, by the way, have rocketed to 40-year highs and look like they're going to surpass that. We'll see. But you can see the Federal Reserve anticipating multiple rate hikes in 2022 as the economy strengthens and concerns about inflation remain central to monetary policy. The Fed Chair Jerome Powell said wages as a key inflation signal to watch in 2022. We'll see. Okay, whether it's up or down, we'll see what happens. Now, LIBOR. I want to do a whole video about this. Okay, I've had subscribers bring this information to me. I've talked about it for a while. Let me just give you the quick lowdown. Okay, we're running out of time. LIBOR to take firm steps towards oblivion on New Year's Day. Benchmark rate has been a fixture of global finance for 45 years, but has been tarnished by scandals. They call it the LIBOR, okay, L-I-B-O-R, but actually it's misspelled, okay, because it's L-I, and then you just got to do a quick insert, put a little E in there, and then B-O-R. Why? Because it was found that they were fixing the rate. They were fixing the rate. It's an interest rate, okay? And you could look at that if you're interested, okay? But essentially, there is something like 250 to 300 billion. I think they mentioned it in here. 230, right there, $230 trillion of existing contracts that rely on it as the basis for interest payments. So this is key. This is so important globally right now to have that LIBOR rate. And whether or not you're going to see this kind of, going out, it all depends. It really all depends. Look, 45 years, it's been there. It's not going to go away overnight, but it is one of the biggest transitions in financial markets in decades. Now, as they say here, from January, the lending rate cannot be used as a reference rate in any new derivatives, contracts, loans, and credit card offers. So they can't use LIBOR. But the existing ones is still there. So it's going to take time to go off it. They kind of made it seem as if, okay, January, actually it was before that, it got delayed. Okay, as of this day, it's going to be over and that's it. Everything's going to tumble down, financial crisis. No. Okay, no. There were some people saying that that was going to be the biggest change ever. Didn't go that way. Okay. As more information comes out, I'm going to bring it to you. Understand that there are big changes happening in the financial system, and usually it just gets worse. This article here, I don't have time to get into it all. Essentially, she's talking about the 20-year S&P returns. And what is it? Like, what is it about that? Well, essentially, there's an 11% return, right? Well, not exactly, because depending on those years, it could be 2 to 7%, and sometimes it could be 17 to 18%. It depends where you are in the cycle, okay? We got Bitcoin right now, faces a year-end technical test after its December swoon. On many different indicators, you could look at it, and it will show you that Bitcoin's kind of at that level. As I record this video, it's at approximately 47,000. I want to see where this goes, especially, you saw the stock market pull down in the second last trading day of the year. We'll see what happens on the last trading day. And then this right here, actually two more quickly. Big Tech's $10 trillion bet on politics as usual. Can the lobbyists keep the support right now? Because there's basically no regulation for the tech industry and $10 trillion invested in just a few names. If that hurts it, oh my goodness, look up below, okay? Pelosi scoops up call options for Google, Disney, and Roblox. Many people have literally made it a point to invest in whatever she does, her and her husband. And looking at this here, you just see Alphabet and Micron and Roblox and Salesforce and, Walt Disney and so on, adding to the list of this. And I just thought it was really funny to talk about all of that, because for so many people, it's become a joke to look at what's been going on in the markets when you see what's happening in the real economy. Truly unfortunate. I tried to highlight as much as I can for you. If you appreciate that information, hit that thumbs up button. It's right down there. And I want to thank you for doing that. Thank you for coming in. I'm going to end it there. If you found this video informative, simply just click that like button. When you do, you're supporting this channel. Thank you very much. And if you haven't seen this video yet, you definitely want to check it out. So just click it and I'll see you there.